Hello everyone and welcome to Hack.com's weekly webinar series for April 12th, 2018. My name is Sam Borgi, Chief Editor at Hacked. Thank you for joining us wherever you may be. It is around 10 a.m. Eastern Standard Time here on Saturday. We are obviously tracking major movements in the cryptocurrency market. Our goal every week is to give you just a short, hopefully sweet recap of the biggest market movers over the past 7 days, looking at some of the major factors behind those moves and drawing your attention as well to what are some of the trading themes that could impact cryptocurrency prices and the broader financial markets as we move forward. If you have any questions or comments, please email me directly at sam@hack.com or leave us a comment on YouTube or on the Hacked page, and we'd love to hear from you. Our agenda, we like to keep it nice and simple every week. We want to give you a weekly recap, look at the major market moves, of course focusing on the global cryptocurrency market. We also want to give you a recap of Hack.com and what to watch for as we head into next week. So many of us have been very encouraged by market behavior over the past 4 or 5 weeks, and that cryptocurrency prices rebounded sharply from their April swing low of around 249 billion, if you recall, in early April. After 4 weeks of huge gains, we saw a huge pullback over the past 7 days. Really, the pullback was concentrated, I would say, on Friday for news related to a major South Korean cryptocurrency exchange. But just to kind of put it in perspective, the market bottomed at 249 in early April. It jumped all the way up to around $470 billion last weekend. But since then, it's declined sharply. And if you analyze it from a 7-day period, we're down about $75 billion this week. So huge declines. A lot of it was concentrated in the altcoin space. Obviously, Bitcoin also declined sharply, but altcoins also fell. Earlier in the week, we saw prices actually relatively steady. I mean, Bitcoin held above $9,000 for much of the trading week. It wasn't until the end of the week where we heard about Upbit, which is, I believe, the 4th largest cryptocurrency exchange by market cap, or not by market cap, sorry, by trading volumes. It doesn't have a market cap. 4th largest crypto exchange by trading volumes was raided by authorities in South Korea over allegations or over suspicion of fraud. So according to Upbit, this hasn't impacted its operation. Withdrawals, deposits, transactions are all going normal, and it says it's going to comply by what investigators are asking for. So that was the big news that erupted onto the scene on Friday, triggering a huge decline across the cryptocurrency market. As you know, South Korea is home to a massive cryptocurrency space, considered one of the most speculative in the world. A lot of speculation happens in South Korea. So obviously, news, local news reporting a negative news headline like an exchange being raided will obviously impact market sentiment in that region. And of course, that trickles throughout the world. We also have seen news about another perhaps withdrawal or transfer by the Mt. Gox trustee, the so-called Bitcoin whale, the Tokyo whale, who was offloading billions of dollars worth of Bitcoin and Bitcoin Cash. We heard reports on Friday that roughly 8,000 BTC was transferred out of a few wallets associated with the trustee. It was 4 wallets, I believe, at 2,000 per wallet. So obviously, whenever we see such large movements from any kind of wallet associated with the Mt. Gox liquidation, we obviously are led to believe that a sale is on the way. When the Bitcoin whale dumps huge amounts of Bitcoin, or a huge number of Bitcoin on the market, that obviously influences prices. We saw that a few weeks ago as Bitcoin surged above $8,000 or $9,000. We saw a couple of accounts offloading huge sums of Bitcoin. So you can expect that to happen as prices continue to recover and approach the 5-digit mark once again. Nevertheless, the BTC price bottomed at around $8,200 on Friday, but has since recovered to around $8,600. Altcoins shouldered a huge percentage of the decline. They fell by about $54 billion over the past 7 days accounting for 70% or so of the total loss. Ethereum, XRP, Bitcoin Cash, Litecoin, EOS, Stellar, etc. All these major altcoins fell double digits on Friday. And this chart showcases for you movements of Bitcoin over the past 5 days. You see prices peak at around 9,400. Earlier in the week, they were above that level. They crashed to around 82 to 85, 82 to 8,300, but have since recovered to 8,600. So we are monitoring movements in Bitcoin, of course, and the broader market. The global crypto sphere looks like this. We did see a bottom here on Friday. At last check, we were valued at around $394 billion. I believe the market fell to around $380 billion on Friday. It has since recovered, but of course, it's still well off where we were at this time last week. So that was cryptocurrencies. We are, of course, monitoring stocks, Forex, commodities, and so on. Huge moves in the stock market this week as the S&P 500, the Dow, the NASDAQ actually gained around 2.5% each. Earnings optimism as well as subdued inflation were among the primary catalysts. So we saw earlier this week that US CPI, the Consumer Price Index, rose less than expected last month, although the year-over-year rate was around 2.5%, which is still well above the Federal Reserve's target. Nevertheless, that raised optimism that inflation isn't as strong as some had believed, which could mean the Fed could temper its expectations about how fast or how aggressively it normalizes monetary policy. The S&P 500 index, the major benchmark, closed at 2-month highs as volatility fell to its lowest level since late January. So the market is behaving like it was last year, like it was at the beginning of this year, as the VIX and the S&P diverged sharply. VIX is now trading at around 12 to 13, which is more like what we've been used to prior to the past 3 months or so. U.S. corporate earnings continue to beat expectations on the whole. 91% of S&P 500 companies have reported so far. Their blended earnings growth rate is on track for the fastest quarter of growth since Q3 2010, according to FactSet. So that was just a brief market recap. Obviously, Hack.com, we are continuing to develop regular articles, analysis, ICO pieces, long-term cryptocurrency reports, forecasts, as well as news. Some of the ICO analysis that we covered this week include Smart Chain, Evolution, Squeezer, and so on. We are releasing ICO analysis articles on a daily basis. So if you are interested in monitoring the ICO space, we're the best out there at giving you exactly what you need. We have a lot of great writers who are very, very, very well informed of the ICO market. So they research this market very, very carefully. All of our ICO analysis pieces, by the way, are independently written. We research every piece and we draw a conclusion about the viability of that project. So that's our general approach to how we approach ICOs. In terms of the most read articles of the week, you see the list there. We published a report on Litecoin earlier in the week after reports circulated that Charlie Lee, the founder, was leaving the project. Charlie Lee will eventually leave the Litecoin project in pursuit of pure decentralization, but it's not going to happen now based on his Twitter activity. We're seeing a lot of activity for the Indian rupee, so we covered another piece here looking at a trade recommendation for gold and the rupee. We also saw a great piece by James talking about the Bitcoin crash. I covered an article earlier this week explaining, in the Fed's words, the San Francisco Fed, why Bitcoin has crashed, and they linked it to the introduction of the Bitcoin futures contract in December. And then they drew us to an analogy, or they made a comparison between the subprime mortgage crisis and the Bitcoin crash. They argued essentially that securitization of these assets led to their surge, but then their eventual decline. And this article, number 3 on our list, attempts to deconstruct that argument. And it's a great piece. Let us know what you think. We also covered a piece on Wall Street analyst cautioning against buying Bitcoin right now. This was the analyst behind DataTrek, Nick Colas, I believe. He's one of the most well-known analyst now covering crypto. That was an interesting article about why we might want to temper our expectations for Bitcoin, but overall, long term, the trend seems to be going favorably. And we saw an article here on the long-term cryptocurrency analysis, the uptrend being firmly intact. This was, of course, released last week. So looking ahead, we are keeping our eye, of course, on the cryptocurrency market. Will the rally continue? Are we going to see a bounce from Friday, or is this the beginning of another downtrend? We are going to be monitoring the aftermath of the Upbit raid. Looking at Bitcoin and altcoins, Bitcoin's share of the market rose a little bit on Friday, back up above 37%. Of course, institutional adoption, we wrote this last week, Goldman Sachs and others, we are monitoring how the institutions are adopting or how they're viewing Bitcoin and the cryptocurrency market more generally. We're also going to look at economic data, lots of reports expected next week. If you're a stock trader, if you're a currency trader, economic data is vital in your outlook. And that covers it. Thank you so much for joining us. Let us know if you have any questions or comments, and we'll catch you this time next week for another installment of the Hack.com webinar. Take care.